Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're talking with our friend and colleague Sean Brodrick. Sean is a contributing analyst to Weiss Ratings Daily and is the editor of Wealth Megatrends, Supercycle Investor, and Resource Trader, three different publications based on different macro and micro events. And Sean, it's always great to have you on the show to get your thoughts on the general markets, the commodity sector. I feel like we have to start off with the precious metals because we haven't chatted since back in October. And at the time we were talking in October, we were just starting the pullback in gold and silver. Fast forward here to the second week of December, and we've got silver breaking up above 60 at 61 to 62 the last couple of days. You've seen gold holding steady in the above 4,000, above 4,200, and you've seen a pretty nice rebound from the crash from October to November right back up again, kind of a V-shaped bottom in a lot of these stocks. How are you looking at the precious metal sector?
I see it as really constructive. I've been adding new silver positions for my subscribers. That doesn't mean I won't add more gold positions, but I just think silver just has the most potential here. And we own plenty of gold miners anyway. I felt underrepresented in the whole silver space. I think things look really good. The most recent news we've seen is that even as prices go higher, central banks are buying more gold. So, in other words, they're buying more gold at higher prices, which is exactly what Wall Street said they wouldn't do. They said, oh, they only have a certain amount to spend on gold every month, so they'll buy fewer ounces. That didn't happen. Instead, they are buying more. And I can understand why, because these central banks print money. I mean, they can, right? And they can exchange that money they print for money you can't print. If I had the Bank of Sean, which is what my column in Weiss Ratings was about, I would be running the printing press in my garage at full speed and using it to buy as much gold as I could, because that's an obvious smart move to make. And a lot of central banks are doing it, but it's not just them. I mean, for a long time, consumer interest lagged. Now we're starting to see consumers start to pile into gold through the ETFs and like stuff like that. And I think there's a real worry that, the global financial system is in crisis. There's a crisis looming. And at least if it isn't going to happen soon, there's a destabilizing effect. One thing you want to do when that's going on is you want some insurance, and the insurance is gold. As for silver, well, it has that industrial aspect. I think in industrial uses accounted for something like 59% of all silver demand last year. Was crazy. And silver is more and more useful in all this electronic stuff all the time. And yet there are very few pure silver mines. It comes as a byproduct usually. So you can't crank silver production up the way you might hope to do something else. So for me, I mean, I just think we had a great 2025. Absolutely. I won't argue against that. We're going to have a better 2026 because this is a big bull market. Precious metal bull markets last for years. I believe silver hits $100 next year. My longer term target for silver is over $200. Gold has hit every price target that I've had over the past 2.5 years. And so my target for this next jump will be up to 4,500. And I mean, that's obviously within easy reach, but once you get there, how far away is 5,000? It isn't that far away. And so I just think that they look really, really good here.
Sean, I'm curious in terms of the silver miners that you're buying. You're right. It isn't a large world out there, especially on the majors front. There are not many pure silver major miners, a few more of the junior silver miners. So either can you share names with us in terms of the ones you are buying, or at least characterizations, qualifications of the type of silver miners that you're buying right now?
Well, to my great embarrassment, I no longer owned Pan American Silver or Hecla. So I added one of those to one publication, one to another. But, I mean, it's the juniors that are just really ramping up for us. Those are the ones that are showing the most traction. Heliostar Metals, for example. I mean, we have such a fat triple digit gain on that one, and I expect more. Otherwise, I would sell it. But I expect this can keep going higher. Vizsla Silver is another one. There's a whole bunch of these smaller names that just have so much potential. And I know that people listening to this broadcast, are very aware of the silver market, you have to remember most investors aren't. I don't think most investors are really going to wake up until silver gets to $100. And then they might say, oh, I should add some to my portfolio. Well, what happens between now and then? People like us, people who are wise to this, get those early positions, and we do really well. So it's not too late to buy any of the silver miners, really. I mean, heck, look at our Avino Silver and Gold. That's up 58%. We didn't add that long ago. I mean, there's just so much potential in the first half of like 2026. We will have a pullback at some point. You know, that's how silver and gold go. They go up, they go down. It's a roller coaster, blah, blah, blah. But I mean, we've just saw consolidation for a while. Silver's just breaking out now from that consolidation. Gold's going to follow. I just feel really good about that.
Sean, are there any other macro forces that you see at work pushing gold or silver prices higher? Because what's really driving around the periphery for silver is not so much just the industrial demand, it's really that investor demand coming in. But is there any narrative or reason or rationale that you think propels silver to triple digits and gold to 5 to 6,000 in the year to come?
Well, I mean, silver, that's just inflation adjusted from its old peak. That's all, so it's pretty easy to pick that. Gold, when you look at the percentage moves, and I was doing some work on this last week, which of course is last week, so the chance of it staying in my brain is about zero at this point. But I was looking at the percentage moves gold has made in past bull markets, and it's come nowhere near close to that in this gold bull market. So let's say history is one of the big drivers of these things, I mean, then we have the deficit. I mean, it's out of control. They don't want to do anything to fix it. The more this money piles up, the more they have to buy. And they seem to be only buying short-term debt now, which is really, I mean, that's going to turn out to be a weird kind of science experiment. We'll see how that goes when you're trying to fund your government with short-term debt and you're spending more on the interest on the debt than you spend on your military. And we spend more on the military than all the other countries combined. I mean, it's crazy. So when you look at what could happen to the US dollar this year, I mean, that's something people have to keep in mind. And no, central banks don't buy silver the way they do gold, though some central banks are starting to. So that's kind of interesting. But I mean, that's a big mover for gold. And as has always been the case, when gold takes off, silver just blasts off. It really does. I mean, that's happened time after time. So I expect to see that happen. I hope that kind of answers your question. I was just kind of rambling there.
Sean, all good. We appreciate your ramble. So let's ramble about correlating what you might see in the precious metals or commodities broadly to what might happen to the broad averages, the U.S. markets next year. Because this year, 2025, huge outperformance by gold and now even silver stocks throughout the year. Do you see that continuing next year, even in an environment where this year the market still moved higher and many are still close to at least all-time highs?
Well, one of the predictions that I'm making for 2026, which is not a earth-shaking thing, but I expect a broadening commodity bull market. I expect that continued conflicts as well as a resilient global economic growth. I mean, global GDP is projected to grow 3% to 3.2% next year. And that's an estimate that has been raised more than once and probably will be raised again. So when you have a resilient global economy, when you have the fact that Ukraine and Russia are blowing up each other's energy supply systems, when you have other conflicts around the world, then really that's the thing that will push oil higher. We've already seen a rally in natural gas, so that's somewhat weather related, really. I mean, it gets cold, people buy natural gas. That just happens. But globally, we're going to see more demand for that because, it has all kinds of uses. It's really good. So I expect 2026 to be the year when the energy complex catches up with like metals. And then you can look at things like copper, which is doing very well, aluminum. I mean, just a broadening commodity bull market. That said, I also expect a good year for the stock market, even though I expect that the U.S. economy will continue to weaken for all sorts of reasons that I could go into, but how much time have we got, right? But even though that's happening, I expect that the stock market will continue to go higher. Part of it is AI because of all the spending on that and the AI infrastructure, but there's also other companies that are now leveraging AI to make their profit margins much bigger, because they can fire people and replace them, or at least somewhat replace them with AI. And now we have the US government taking positions and doing economic nationalism with a whole bunch of companies, many of them big tech. So don't bet against big tech right now because Uncle Sam's backstopping them. But also in a lot of critical minerals and like stuff like that. Critical minerals, by the way, now includes silver and copper. They're on the list too. So if you can find a small US copper miner, I mean, it probably has some upside potential that's not really being considered right now, or at least not by a lot of people. Certainly by some people it is. And so I expect precious metals to go higher. I expect the commodity rally to broaden out to include the energy complex and stuff. And I'm expecting a stock market rally too. I'm just not expecting a good economy for, as I said, a whole bunch of reasons.
Well, Sean, it sounds like overall a pretty bullish 2026 setting up if the precious metals continue, if the commodities broaden out into energy, and we see oil finally move like nat gas has moved, and if we see the general stock equities continue plowing higher and tech continuing to plow higher. But you brought up the word critical minerals there, and I want to circle back to a couple of rogue sectors within the critical minerals, things like antimony, tungsten, rare earths. They had a stellar year earlier in the year. They had a lot of support from this administration as far as executive orders, and both administrations, Biden's Inflation Reduction Act bill and then Trump's Big Beautiful bill, both those bills had a lot of provisions in there for development of critical minerals. And when we saw the government actually not just playing matchmaker in the tech stocks, but also doing it with companies like MP Materials or Lithium Americas, or doing it with Guardian Metals for tungsten, or doing it with Perpetua for antimony. And you saw the whole critical mineral suite really rally in August, September, October. It's completely fallen out of bed. We were talking off mic about tax law selling. It's hard to find anything that's down this year because everything's up. But if you look at rare earths, antimony, tungsten, those kind of niche critical minerals, they're down by like 50, 60%. How are you looking at those moving forward?
Well, luckily, I had my subscribers buy most of the stocks when they were much, much cheaper. So just recently, we took another 106% gain on MP Materials, I think. We took an 86% gain on the second half of US antimony. So I was really disappointed with what happened with them. Obviously, they get ahead of themselves. And so people have just decided to bank gains and go chase other things for a while. That's okay. They'll come back. I mean, critical minerals are critical. They are important in so many things. One of my predictions for next year is the robot revolution hits higher gear. And because AI is finally making robots useful. I mean, they were some of the stupidest machines on the planet. I mean, you saw all these videos and all these stories of like robots that couldn't do simple things. AI is changing that. And so we're seeing a big change. But what do you need for those super advanced self-thinking robots? You need critical minerals. There are select rare earths that are absolutely important for those things. And so that's just yet another reason. Antimony, I mean, the world is not becoming a safer place. There's more wars. Hell, Cambodia and Thailand are fighting right now. And the reasons that are given for that particular conflict seem so ludicrous to me that I can't believe it's actually happening. And yet here we are. So what do you need antimony for? You need it to make your artillery shells hard enough that they'll actually work and stuff. So there's going to be a lot more call for that. In fact, one of the picks that I'm going to give subscribers soon does a critical mineral as like a side product. It's mainly in precious metals, but it also does critical minerals. I think that's a great chaser to have on a stock like that. There's just some real potential there. And when things are beaten down, that's not when people want to buy them, but that's when they should buy them. And that's what we've seen now. So if anyone wants to do tax loss selling, I don't blame them whatsoever. And I'm sure that once you wait, you can come back and look at them again. They won't have gone anywhere in the near term, but longer term, they're just going much, much higher.
John, are there any lessons that investors should have learned this year from that whole rare earth trade. The government got involved. These stocks went 10x in a matter of a month or two. Everyone thought they'd keep going higher. And then we got a little bit of different rhetoric out of the US, a little different, I guess, softer tone between the US and China. And these rare earth stocks crashed right back down. So,
Yeah.
any lessons we should learn from that?
Did you know China's tightening its rare earth restrictions again on certain ones, but oh my God, why anyone believes China on this is beyond me. But what you should have learned is you need to bank gains. Just bank half gains or a third of gains, just feel better. If I can bank 106 gains, well, actually, the first round of gains we took on MP Materials was something like, oh God. Well, let's say it was 130%. I don't even remember what it was. But anyway, once I did that, I was playing with the house's money. Now, why did I take 106%? Because every single week it was ending lower. That's kind of a bearish trend. So I was going to bank the triple digit gain while I still had it, but I wasn't losing sleep over it. So buy early when things are cheap, and have some patience. They'll take off. And then if and when things take off, remember to bank at least some gains. I mean, a gain isn't a gain until you ring the cash register, right? That's what people should have learned this past year. I mean, we had some tremendous ups and downs. Remember, I mean, what was it, April, when the stupid tariffs were rolled out? Everything crashed, and oh my God. But that turned out to be a great buying opportunity in retrospect, and here's the thing. There's so much uncertainty in 2026. The Supreme Court has to yet rule on whether those tariffs are legal. I expect they will rule because they tend to give Trump anything he wants. But there is the potential that they'll say, no, those aren't legal. And then they'll have to give, big refunds to all these companies, not the trillions of dollars Trump is talking about. That's just made up. But I mean, they will have to give the money back, and that's going to reset the game board again. Another thing, ACA, right? Healthcare for people who have their own businesses and stuff. Is that about to soar in price, or is it not? This is going to affect the spending power of millions of people, and we don't know what's going to happen. So there's a lot of uncertainty this year. That doesn't mean you shouldn't invest. I'm trying to guide people toward things that will do well irrespective. Precious metals is one that sure looks like a winner. So, I mean, there are things that are going to do well, and I think I wouldn't swim against the stream on a lot of things, but there's nothing wrong with just putting a little money to work after a huge sell-off as long as you have patience. So do that, and just when you have the big rips, take some gains. Because if you just sell half and you have a triple-digit gain, you can always brag about that. Who cares if you only took 30, 40, 50% on the second half of the position? Who cares? You got that big gain. So do that and just try not to be too greedy. That's all.
Well, Sean, maybe one more follow-up on this whole, what did you learn this year? How about the fact that the media often sensationalize things to cause extremes in both directions? You mentioned that April tariff tantrum. Well, a lot of that was fueled by all of the buying in front of the tariffs and what they could be and playing it down and then hyping it up after it happened and everything crashed. With the copper story, talk about a reversal of fortunes back and forth in a whipsaw. First of all, everybody was front loading all the copper into the country. Then they realized that the media had gotten it wrong and nobody actually knew what the tariff was going to be on. When it was announced, the copper price crashed. So did a lot of the equities. And then they shot back up. And as far as the critical mineral side of things, a lot of the media that commented on the meetings with Australia, Cambodia, Thailand, Malaysia, and the truce with China for 1 year, that was really a media event that caused a lot of the selling. But I'll ask you, what did we actually solve as far as rare earth processing? And tungsten and antimony that crashed in sympathy have absolutely nothing to do with what the media was talking about. So how much did the media play into this year?
Oh, probably a lot, but we've been poorly served by the media for a long time, and the big consolidation that's going on doesn't help. I mean, basically, they're just going to try to get eyeballs, so they're going to sensationalize everything. That's just the way it goes. I have no cure for that whatsoever, except that I find more and more I am getting more of my news from Substack and YouTube, because there are individuals who write in those places who have a really good grasp of what's going on, better than I do. And but I mean, when was the last time I tuned into Bloomberg on a regular basis. I mean, I usually have it on in the background with the sound off just in case something happens and like stuff like that. But you know that you're not going to get the news you need from there. You really have to do your own digging and a lot of digging, trying to stay ahead of all this and not get freaked out. And it's so hard not to get freaked out, especially when all the news is designed to freak you out. I mean, geez, it's tough to just keep a level head in this. But if you can, I think you'll be okay.
Well, I guess we can wrap it up there, Sean. Yeah, I think that's the lesson is to try to have a level head. When you have the gains, take the gains, or at least take some off the table. Try to look at the trends, and you do a great job of that in your publications when you're thinking about a super cycle or a wealth megatrend. These are patterns of behavior that are going to play out in the market over long periods of time, and it gives people that subscribe to your publications or people that are looking at these markets long periods of times to position during pullbacks, during corrective periods for the longer term trends. So whether that's robotics or we've talked about defense before and drone stocks and counter drone stocks and AI, whether that's critical minerals, whether that's precious metals, these are trends that have been playing out for the last couple of years and they're not done playing out. So I recommend people clicking on the link below down in the show notes and checking out some of Sean's publications if you want to get more details. He and his team can help you out. Sean, this is probably the last time we chat here in the 2025 year. So looking forward, as always, to our next conversation. And the next one will be your outlook for 2026. So, and if we don't talk to you, have a happy holiday season. Have a great end of the year. And as always, looking forward to our next conversation.
Hey, you guys have a great time. It's always wonderful talking to you. And I'm really looking forward to talk to you in 2026.